If they're all streaming stuff. Yeah.
Okay, I see it live. So it's going.
Okay, I'm gonna go ahead and start the webinar then.
All right,
And
I'm
start
gonna
sharing my screen.
put myself on mute.
All right, so if any of you guys are logging in right now, we're gonna start in just a few minutes. Just giving folks a chance to log in and get connected on YouTube, which has a little bit of a lag time. So this is one of the benefits, I think, even though we love being in person, that we can get together during inclement weather, which may have made it more challenging if we were trying to get together in person tonight. So we're trying to find our silver lining, right, of our inability to get together in person. So we can still meet tonight, which is great. I'm just going to pull up my YouTube also and see that we're on. So we have a really good crowd that's going to join us tonight. A lot of folks signed up who are interested in the tax credits. So we appreciate everyone joining us. Okay, great. We're at 6 o'clock. So I am so excited to have everyone on with us tonight. Thank you for joining us on this frosty day in Little Rock. My name is Patricia Blick. I'm the Executive Director of the Quapaw Quarter Association, and I'm joined virtually by Shelley Stormo, our Membership and Events Coordinator. I would also like to thank our donors as well as our corporate and individual members. We are able to continue our educational programs with your support. You can find a list of our corporate members on our website at quapaw.com. If you're not a member of the Quapaw Quarter Association and you believe in our mission, preserving Greater Little Rock's historic places, we invite you to join and support the work that we do. Please go to quapaw.com to join for as little as $35 per year, or you can go there to make a donation. Before I introduce our speaker, I want to let you know that we'll be taking your questions at the end of the talk. So please type your questions into the chat area of Zoom. And we are also sharing this program on YouTube, so you can enter your questions in the comments section. On to tonight's preservation conversation. We thought it would be a good opportunity to revisit the historic tax credits because we are working with our statewide preservation partner, Rachel Patton, at Preserve Arkansas to raise the overall cap for the state historic rehabilitation tax credits during this legislative session. We are looking at increasing the cap, statewide fiscal year cap, from $4 million to $10 million in this legislative session. We have a draft of the proposed legislation to raise the cap. We're working also with the folks at the Department of Heritage Arkansas Preservation Program to make some additional modifications to the current legislation. So let us know if you're interested in getting a copy of the legislation, and if you have the ability or desire to reach out to your legislators to get their support behind the legislation as well. Right. Again, we have a full agenda of preservation conversations for 2021. If you have not received our flyer, please let us know. We're happy to mail it out. Just send us an email to qqa@quapaw.com or to me, patricia.blick@quapaw.com, and we will put one in the mail for you. I am so pleased to introduce tonight's speaker, Amber Jones. Amber Jones is a historic preservation consultant specializing in the historic rehabilitation tax credit, National Register listings, and facade easements. She has been preparing federal and state tax credit documents and facilitating the sale of the Arkansas tax credit for property owners since 2010, which is just 1 year after the program was adopted, 2009. To date, she has completed more than 400 projects with property owners receiving over $20 million in federal and state tax credits collectively, with about $14 million in state credits funded to cash. She has projects statewide in Arkansas, and she didn't put this in her bio, but I know she also has projects outside the state of Arkansas. She's done some projects throughout the United States. Amber lives in an 1890s Queen Anne Victorian in Little Rock's Quapaw Quarter with her husband Scott and their 3 daughters. Their home and family were featured on an episode of Sci-Fi Channel's Ghost Hunters in 2013. And she didn't, again, include this in her bio, but I'm going to add on. She also has been a home on the QQA Spring Tour of Homes, the Martin Tunna Folk House, which is lovely. So we appreciate all the support she's given us and continues to give us. So I'm pleased to welcome Amber. Join me in welcoming her. And I'm going to turn this screen over to Amber.
Ah, there we go. Thank you. Thank you. The technical assistant. Okay, so Patricia, can you hear and see me? No.
Yes, you look like you're good to go. We see you, we have you spotlighted, and we have your presentation on the screen. So you're good to move ahead.
Okay. So I'm going to give a brief rundown as possible of the mostly the state historic preservation program, but I will go briefly over the federal rehab credit as well, because you can twin those together, and a lot of people do that have income producing property. So we'll go over just a little bit of the requirements if you want to do federal, but we will mostly be talking about state. But if you have questions about either one, we can try it. Okay, so the federal and state historic tax incentive allows the property owner to recoup 20% federal with no cap or no limit, and 25% state with caps of the cost of renovating a historic building by way of a credit on their federal and state tax liability. So when we say a cap, the state program for residential, if it's your private residence, there is a $100,000 project cap. If it's income producing, that cap jumps up to 1.6 million. So let me see here. I can maybe all a little over. What is a state tax credit? A tax credit is the authorized amount that may be applied against the Arkansas corporate income tax and premium tax, where they're earned by an individual, partnership, limited liability company, and S corporation or corporation. So just about anybody can apply for the state tax, the historic state tax credit. And what structures are eligible? Properties that are listed on the National Register of Historic Places or are listed as a contributing structure within a historic district on the National Register. Properties that will be eligible for listing following rehabilitation will also be considered. So that's a whole nother ballgame right there if you want to apply to put your property on the National Register. But that is something that can be done, but there is a process. Any individual or firm who pays personal or corporate income tax in Arkansas is eligible. Persons or firms without sufficient tax liability to take advantage of the credits they earn are allowed to sell their credits to another taxpayer. The state tax credits are fully transferable. So this is applied to Arkansas income taxes that you pay or file every April. So if you have taxes that you pay to the state of Arkansas in April, If you did a tax credit project successfully, then you would have a little pile of money to pay those Arkansas income taxes. And then if you don't need a tax credit because you don't have a lot of taxes to pay, or you don't want to use that money towards your taxes, you can actually sell your tax credit. And there are banks that buy them. I've had different family members that will contract to buy them. So it's transferable, meaning it can be sold. And it just, I mean, someone today said, wow, is that legal? I'm like, yes, it's perfectly legal. It's a real thing. So, commonly asked questions. Does the Arkansas Historic Rehabilitation Tax Credit carry over from year to year? Yes, you may carry the unused credit forward for up to 5 years. This gets confusing sometimes because your project does not have to be done in a calendar year. So the program is based on when your project is complete. So you could have a project that takes you 6 months, or maybe it takes you 2 years. So you do not get your tax credit certificate until your project is complete. So even though you're still working on your project and it comes time to pay your taxes, you will not have a tax credit to use against those taxes, but you will get it, and it will apply to the years that you've done your project and the receipts in those years. Can I apply for both federal and state historic tax credits? Yes, if the building will be used for income producing purposes. There's also a couple other little caveats we'll go over. Can I transfer or sell my state tax credit once the credit is earned? Yes. However, when you sell the credit, the IRS does consider this taxable income. So you do want to be aware of that. So there's 3 initial requirements for the federal tax credits. So the property be listed individually or listed in a district or eligible for the National Register. The building be used for an income producing purpose. So this could be like you have your business in the building, or you lease out the building to someone else, whether it's a rental house or whether you're leasing it to someone and they have their business in it. The purpose is that you are getting income off the building, and that the owner spend as much as the basis value of the property. Now this is the little tricky part. So during a 24-month period selected by the taxpayer, rehabilitation expenditures must exceed $5,000 or the adjusted basis of the building, whichever is greater. And this comes up a lot when people are considering doing federal and state tax credits together, and they're purchasing a building, and maybe they haven't purchased it, or maybe it hasn't closed, but they'll call and they'll want to know if they can do federal credits on it. And what we have to do is we have to figure out the basis. And depending on the building, maybe you're getting a really good deal. And like this example is $140,000 purchase price. You get to take the value or the cost of the land away from your purchase price. So for easy math's sake, we're taking $40,000 away as the value of the land. You can look on the assessor page and get what the city values the land or the county values the land. But you also can do kind of evaluation, and you can look around and see what empty lots in your area sell for. And that would also give you maybe a more established evaluation of the land versus what you're assessed at. So there are some projects where it barely works, but this calculation helps it work, is if you can take the value of the land away from the purchase price. So then this comes up with $100,000. So if you did a federal and state project on this property, you'd have to spend a minimum of $100,000. So I have some very small projects that they qualify for. I've got a project that it's a house, it's a rent house, and the basis was, I think it was like $30,000. And they've spent 60, and so they're able to do a project. Some projects, if you're paying $500,000 for the building, but you're not planning to put $500,000 in it, maybe you're planning to put $450,000 in it. That valuation of the land can help you get closer to where you qualify for federal. But that's also if, it's got to be income producing, and then you're going to hold it for 5 years as income producing. So with federal, it gets a little hairy, but it is possible to figure that out and get that benefit.
And Amber, I'll just jump in here and say, sometimes there are folks who have had a property for a really long time, so it's been fully depreciated. So they might be able to spend, not a substantial amount because they've fully depreciated the property. So
Right. And
that happens too.
And that's another case too. So you can depreciate the property if you've had it for however long. You can, look back, and there's calculations to figure that out. But then also, if you have improved the property, say you've had to put a new roof on it, or you did some updating to it, in the last 5 years, you do have to count all of those things onto it. And that also, again, gets that adjusted basis number either up or down. So it's really, it's something to do your calculation on. No one asks you to show proof of what you figured out your adjusted basis is. What would happen is if you do your project, you file your taxes, you use your tax credits, and then maybe at some point, for whatever reason, you get audited. That's when you would want to make sure, before you started this project, that everything checks out, that, your lot value was correct if you did the adjusted basis, and you can show proof of your depreciation and your improvements and how you figured out your adjusted basis. Because like I said, no one checks that. That's kind of a on your honor thing. And, if the IRS ever came knocking, you'd want to make sure you had that all straight. So how much are state tax credits worth? So the state tax credit is 25% of the total qualified rehabilitation expenses incurred. For income producing properties, we have that cap of 1.6 million. So you don't have to spend that much, obviously, but a lot of people find that, they do, for whatever reason, most projects are above 100,000. Maybe they're 120,000, maybe they're 150,000. On a large building, it would not be uncommon to spend 1.6 or 2 million. So you could spend 2 million on a large project, but you are going to cap out at 1.6. So you just don't get that benefit of the $400,000 if you went up to 2 million. On residential, it's the cap of $100,000 of rehabilitation expenses on a non-income producing property. And so a minimum of $5,000 must be spent to qualify. On the income producing on the state side, a minimum of $25,000 must be spent to qualify. And so I did some checking just to get correct numbers for you all. Since the program was started in 2009, we've had a total of 599 completed projects with almost 35 million tax credits awarded. And then the total project cost of that is 353 million and some change. So the tax credit has really helped us improve property and improve cities. So here's some links that I've put up, and I've also given you the Google hint how to find them. But the first one is the qualified rehab expenses. This is a list put out by the Park Service and the IRS, and it's a list of the generally eligible items and then a list of the expenses that do not qualify. So things that do not qualify are your acquisition cost, appliances, cabinets, carpeting, if it's tacked in place and not glued, decks, so like brand new decks are not eligible, demolition costs. And this is demolition, like if you destroyed a building and carried it away. But if you have demolition cost of like the place is in ruins and you're really having to do a lot of cleanup, that counts. Fencing does not count, feasibility studies, financing fees, furniture, landscaping, leasing expenses, moving of a building does not count. New construction does not count. They will approve if it fits the criteria, they will approve new construction or a new addition, but you cannot count that new addition, but you do want to have that approved. Outdoor lighting, parking lots, paving, planters, retaining walls, sidewalk, signage, storm sewer construction cost, window treatment. So those things do not count. Things that you can typically on the inside of a house, like window treatments or rugs, things that you could pick up and carry away. The appliances are the same thing. If you can pick it up and carry it away, you generally cannot count it. Things that do count: walls, partitions, floors, ceilings, permanent coverings such as paneling or tiles, windows and doors, components of central air conditioning and heating, plumbing and plumbing fixtures, electrical wiring, lighting fixtures, chimneys, stairs, escalators, elevators, sprinkler systems, fire escapes, and other components related to the operation or maintenance of a building. So some other things like that are security systems, like if they're wired in, those count. And so then the other thing is the preservation briefs. Even if you're not doing a tax credit project, the Park Service has about 50 preservation briefs that are great if you want to look up how to take care of your historic masonry, or vapor barriers, or putting coatings, permanent coatings on, insulation. So solar panels, solar is an eligible expense. Of course, all these things need to be done in a certain way and approved before you do them. But there are things like that, like solar qualifies as a qualified rehab expense. There's other things listed on the rehab expenses that we don't think about. I always point them out at the end of a project, but there are hard cost and soft costs. So the soft costs are construction period interest, taxes, architect fees, engineering fees, construction management cost, reasonable developer fees, and any other fees that would be normally charged to a capital account. So like if you hired a consultant like myself to help you with your project, those fees count. But anyway, those things can be found at those two links. So now we're going to try just to briefly go through filling out the applications. And I've got some examples. But the part one, so there's 3 parts to a tax credit application, and they are called the part 1, the part 2, and the part 3. So part 1 is the evaluation of significance. And so usually, as we pointed out, it's a contributing building within a district. It could be multiple buildings in an individual listing, like maybe your historic carriage house is listed with your house. Preliminary determination of eligibility, whether individual or within a potential district. That's if you're not eligible yet, but maybe we ask for preliminary determination. Or a part 1 is not required if your property is individually listed, an individually listed property. So that's what the part 1 does your building qualify? And so filling out that part 1 is necessary to find out if your building qualifies. This is a picture of a building that does not qualify. Maybe at one time it qualified, but it's not had any maintenance, or something tragic has totally happened. And so it's missing a bunch of its walls and apparently its roof. So this building, if someone filled out a part 1 on it, if it had deteriorated since it was surveyed, they would find out that, no, we're sorry, it's not eligible for the program, because generally you have to have walls and a roof. There's some buildings that we've worked on that maybe they've caved in, but they've still got a roof, or maybe a wall has caved in or fallen, but they've still got the majority of the walls and roof. And so those do, but that part 1 will tell you if your building qualifies. So this is a historic survey form from Arkansas Historic Preservation Program, AHPP. So here's the actual, I just put the first page up there, but this one for this building looks like they've got about 8 pages. And some of the pages just have a little picture of the property when it was surveyed. So this helps you fill out the part one. And so you would give the address to the staff at Arkansas Historic Preservation Program, and they would email you the survey of your building, especially, that it's been surveyed, or it's in a historic district. And that's how they make historic districts, is they fill out these surveys. And so those are all submitted when a district is nominated to the National Register. So this, and Patricia, I'm having a little problem because the pictures of us are over my PowerPoint.
I think though, for the participants, they're not seeing that part. They're just seeing you on the side. So,
Right. So I don't know there. Maybe I can move you. I just can't read what's on the slide.
oh, okay. I'm sorry. So let me, you could
But I think I figured it out. A picture us at the bottom. Maybe that'll work. Okay.
Oh yeah, I think you can relocate the picture of yourself as the speaker, but really what they see on the side is you on the side and then the full slide. So I'm sorry, you're blocking your slide a little bit.
That's okay. I think I got it fixed.
Okay.
So it's usually about 3 pages long and has exterior photos only of what your building looked like when it was last surveyed by the Arkansas Historic Preservation Program. The individual listings, if your property is individually listed, it will have interior photos, but these that are contributing a district, you're only going to find the exteriors. And they use those exterior photos and the photos that you're going to take and turn in to the department. They look back at these surveys and see if the building has changed any significantly other, than like, oh, it's still the same facade, but the paint is peeling. Oh, this person looked like they've enclosed their front porch. And so that may change whether the property is eligible, or they can tell if like artificial siding has been added at some point in covering the details. So this is a part one application. And in addition to these 2 pieces of paper that you fill out, you're also going to, they ask you to print off a map, and you just go to like Google Maps and you put in your address of your building and you print out the little portion of a map it shows you. It usually has a little red placeholder on there. So a map, photos, and floor plans are part of the part one application. And so this part over here, it's a description of physical appearance. That is what you're going to find in that historic survey form. This one, it's like, it says that the style is 15, and 15 says craftsman. The plan is a square. It's 2 stories tall. And so you're just going to take the information from this survey and you're going to put it in sentence form into this form. So on this one example that I've done, it says primary style is craftsman bungalow with a camelback addition to the rear. Construction is frame with original weatherboard siding. The gable roof is covered in asphalt shingles with exposed rafter tails, deep eaves, and brackets. So forth and so on. You would point out, it'll show you, it'll tell you what kind of windows, and if they're like 6/1 or 35/1 or 9 light casement. So you would just translate all this into this form. And then at the bottom, it asks for a statement of significance. And really, there a lot of times there'll be like a sentence in this survey form, and you can just copy it out and put it in here. Or if you know a little bit of history about your building, you could put that in here. This one, it says the house was occupied by John Paul Sims and his wife. Mr. Sims was an insurance salesman. The original house, a Victorian cottage, was built about 1886, was extensively remodeled in 1917 to a craftsman bungalow. And if you're interested in history or finding out more information about your building, Ancestry.com has the city directories online. And so you can go on there and just even by that way, finding your address of the building and finding out, who at least was there in what years. And a lot of times it'll say what their occupation was. So that's pretty simple on that. So the other thing is you're going to need a floor plan. And so each application part requires a floor plan. So your part 1 requires one, your part 2 requires one, and your part 3 requires one. And it doesn't have to be very fancy. You don't have to hire an architect. This is a simple house. And I got the exterior walls off the assessor site. And then I went and filled in the walls, kind of how the house is divided. And so you're going to number your photos and then key them to the floor plan. And so these have numbers on this floor plan that I have keyed. And the floor plan does not have to be to scale or done by a professional. It can be a sketch, if it's simple enough that you can do that. If you've got a bigger project and you're hiring an architect, wonderful. That'll be a very clean floor plan to pull together. This one I have labeled like the front, and this is the back, so they kind of have an idea. And then you want to take a picture of every side of your building. And I like to stand as far back as possible and get the whole side of the building in there if you can. And the same way when you're doing the interior, stand as far back and get the whole wall, so that someone sitting at a desk can look at these photos and look at this floor plan and really get an idea of what your property is like. So 4x6 color photos should be printed out. Mailing labels work really well for numbering and describing the photos. It's hard to write on the back of the photo. So if you use a mailing label, you can write on that easily. And then all photos should be labeled, numbered, and keyed for each part. So here is the front of this house. And then I've got a picture of the back, and it says this is photo number 1. It's the front. I am facing west. And I put the address on this first one, 1900 Arch. Here's another, this is just examples. This is the living room. I'm facing east. So that's like the east wall. And then this next one is the living room facing west. So the part 1 photos show what the property is like, similar to real estate photos. You do want to show bedrooms upstairs if there is one. Depending on how big your building is, you're either going to be doing a lot of photos, or maybe, if it's just a house, maybe it's not going to be that, big of a deal. So the renovation work must follow the Secretary of Interior's standards for rehabilitation. And so number 1 is retain historic materials and features. If you're doing such a large project that you do go ahead and hire an architect, you need to let your architect know if you're planning to do a tax credit project, because this is what you're going to be held to. And I have worked with architects that do not understand this program, and they want to make an old storefront look brand new. And they want to get rid of the historic storefronts that's there and not try to repair it and put in brand new. And that really, unless you can show with photos that, this storefront is gone and cannot be repaired, every single bit of it, something like that is not going to pass muster. And it's just because architects aren't trained in preservation architecture unless they have engaged themselves to do that. That's their passion and what they want to do. So, you could get an architect that is not familiar. Retain historic character. So these things, what makes your house special is its historic character and its materials and features. So like on a craftsman house, usually those have wide eaves in the roof line, maybe some brackets. Those things are all important and define the house. Windows are especially important. Windows are considered a character defining feature. If you've still got your original front door, again, that's a character defining feature. And these are things this is what the program is about. It's about maintaining the historic integrity of the properties. And if you do that, then you get this little reward at the end. So it's not about making all the properties look brand new like when they were first built. This does apply to the exterior and the interior. So like in historic districts, if you're in a controlled historic district, a lot of times they're just controlling what you do on the exterior. So you need to be aware that, those are different entities, and the tax credit program is its own thing. And so it is for both the interior and the exterior. So original doors, original windows, doors, woodwork, wood floors are considered character defining features and should be maintained.
So Amber, I'm going to revisit your comment about the another review body. So if you have to go through Little Rock Historic District Commission in Little Rock or capital zoning, and how do you recommend you do that? You put your full package together, even though they only have jurisdiction on the exterior. I mean, what would your recommendation be for those multiple layers of review?
What I recommend is that you pull your tax credit application together first and get that hammered out. If there's any issues with it that need to be hammered out, and get your approvals through the Arkansas Historic Preservation Program. And then that way you could tell, you could put that in your application. You could put your scope of work in your application, that it's been approved in your application to the historic district. Because that's what, again, I mean, people can screw up because, they got approval from capital zoning and they think they're good to go. And then they go and maybe, they rip out everything in their house, and then they realize there's a tax credit program, but then they've already, inadvertently shot themselves in the foot. Or sometimes the historic district will approve something that the tax credit program will not. And the tax credit program, again, is an arm per se of the National Park Service. And I know that the historic districts, those staffs, I mean, I will quote, that I've heard in the past of, well, if the historic preservation program approves it, who are we to say that, there's a problem? So I would recommend getting your tax credit approval first and then going to your historic district, again, hopefully well ahead of your project. And, showing them, that this is, these are the hoops or the things that we're planning to do, and it's been approved by, Arkansas Historic Preservation. I mean, and I've also seen things that it's just easier to get approved in your historic district when it's already been approved by the tax credit program.
Very good. Thank you for sort of clarifying that just because a commission approves it doesn't mean that the state and the feds will approve it. So really, it's good to get that higher level of review out of the way and then go to your local commission.
Well, and people that have never done this before, that maybe you're new to having a historic structure, or you've had one and now you finally got the resources to do the things you want to do. And it's hard to understand and navigate all these different historic districts, tax credit program, and this historic district is by the city and this historic district is the state. It's a lot. So I understand the confusion.
It is. Very good. Very good point. Thank you.
Okay. So this one is backwards. I did have it do's and don'ts, but there's so many don'ts. I put the don'ts. I said it's don'ts and do's. So don't remove windows and doors. These are historic windows and doors. Don't paint your brick that has never been painted. Don't expose interior brick that is not already exposed. Don't paint woodwork that has never been painted. And do match mortar color when repointing your bricks. A lot of times on the historic buildings, the mortar may be red and then someone does a repair with white mortar, and it's just, it doesn't look great. But also, if that was a tax credit application, they would be telling you, you need to correct this or you're not going to be able to get your tax credit. So let's say our part one got approved, and now we're moving on to the part two. So on the part two, this is the signature page. It's the first page of the second part of the application, and it's going to ask you for an estimated budget. And it's great if you go out and you talk to contractors and get your 3 estimates or whatever. But they don't make you get estimates. I mean, especially like on residential, and most people will put like on residential like 100,000 because they know they're capped out at 100,000. Or if you have a ballpark in your mind, that you want to put down, but no one is going to ask you for to go actually get estimates before you fill out this paperwork. But it will ask you for an estimated budget, a project start date, and a completion date. And let me just say that projects go over time and over budget all the time. So it's, nothing is set in stone by you putting, your completion date as July 2021 and you don't finish till December. No one's going to call you or come knock on your door. You just turn it in when you get it turned in. It'll ask number of housing units before rehab. If it's single family, you're just going to put one, but maybe it's a duplex or maybe it's a commercial building that has apartments upstairs. So you would put, if you had 4 apartments. Number of housing units before rehab, after rehab. Well, maybe you've got a triplex and you're taking it back to single family, or maybe vice versa. Maybe you've gotten approval to make it a duplex. So that kind of takes up for those. Square footage before and after. And what they're looking for here is what I mentioned earlier. Like if you do an addition that you got approved, but that addition you cannot count. So that's kind of their litmus test is, did this building got bigger, but did they take those expenses out when they claim the project? And they'll ask you for if you want, if you're filing this as an organization or partnership and that tax credit identification number, or if you're just claiming it through your own social security number. So this is where it's legit, is they want your tax ID information. So that's that signature page. That is easy compared to what's coming up. And this part is not that bad either, but people get overwhelmed with it, and it's probably why I have a job. And it's just not that hard. And this one is filled out very simply. And so this is the part of the part 2. And then you can add as many pages like this one. You'll notice it's divided into 8 sections. And so half of the page, the left half, is the current existing condition. And then the right side of the page is where you're going with it. So it says describe before and after procedure. So this number 1 is the roof, and it asks for approximate date of feature. Usually that's the date the house was built. That's back in that survey form. But this says the gable roof is slate and in good shape, but needs to be sealed around the edges and chimneys. Flat section of the roof is original tin and has been degraded from years of leaves falling on the roof and causing pits and holes. They've got photo number 1. So that's when you've labeled your photo. So you'd have a picture of this roof. And then their proposal is to seal the roof in areas necessary, repair flat tin roof with 3 coats of mule hide coating. So that's what you would say your proposal is. The next one is exterior woodwork. Exterior woodwork and trim dingy and peeling. Past poor paint job left splatters of paint on the brickwork. What they propose to do is scrape, prime, and paint exterior woodwork and trim, remove paint from the brick with a safe solvent for brick cleaning, or touch up painting to match the brick color. And then that's photos 2 through 15. So that's all that you're showing, all the exterior, the paint splatter and the peeling paint in photos 2 through 15. So forth and so on. So it does not, have to be a crazy detailed thing. It just needs to be, at the very least, a couple of sentences about what you've got and the photos. And photos are worth 1,000 words. And then what you want to do. And this is how they'll determine, because there will be things that maybe you want to do that are not approvable depending on what you've said you're going to do. Like if you had, your windows are leaking and causing drafts, and your proposal is we're going to pull out the existing original windows and we're getting all brand new wood windows that look just like the existing wood windows. Well, even though you would go to the trouble to get brand new windows out of wood that look like your existing windows, maybe with insulated glass, they will not approve that. They will not approve new wood windows unless you can show in photos that your wood windows are beyond repair. So that's one of the things that if that was in this application, it wouldn't pass muster. And they would tell you when they send you back your paperwork, they would say, maybe we approve everything, but we cannot approve what you want to do to your windows. And this is what we recommend. And, maybe your windows just need to be scraped and reglazed. and primed and painted and, you know, caulked real good around the edges where the woodwork meets the window trim. And so on that one thing, if that did not pass muster, you would need to get a different idea about how you want to handle that, or possibly not engage in that work at this time, because the tax credit program is an all or nothing program. So if you do one thing wrong or that doesn't meet the rehabilitation standards, then your whole project fails as a tax credit project. And so, and they don't have a rubric, you know, just because you did, you know, 14 things perfect and wonderful, and you did one thing bad, that one thing will make the whole thing. You don't get bonus points because you did the right thing over here and then the wrong thing over there. So back on the part 2, you know, it could be a small project. It could be just these 4 items. I've turned in a project where we just had 1 item. And you get your approval back. And if they don't say anything about, you know, if they just send you the paperwork back and it's signed at the bottom, but down here on the bottom, this is where they approve it. And the director of historic preservation, like, he dates and signs it if he's told that your project meets the standards, there's no issues. If it doesn't, there's one of these down here that says the rehabilitation of proposed will meet the Secretary of Standards if the following is done. And they would have a condition sheet. And the condition sheet might say, like, if it was about this window thing, you know, this violates rehabilitation standard number whatever, and we propose that you fix your windows, and you could even get storm windows, but we cannot approve you to, you know, the work that you laid out, we cannot approve that. And then that's why you want to turn your project in well before your paperwork in, before you start your project. So if you do have something that they do not agree with, that you have time to find out about it and then either correct it or not do it right now. And instead of, you know, your whole project not passing because you didn't wait to hear and you moved ahead and then you inadvertently did something that they can't approve. I realize that's a lot of stuff to take in. So anyway, you do your project, you got approved. You met, you know, or you met with them about the conditional issues and got those taken care of, and you go on and you do your project. So maybe it takes you 6 months, maybe it takes you 2 years. But when you're done with your project, and when, you know, all the paint cans are put away, the ladders are put away, every, you know, things dusted, when it is move-in ready, is when you want to come in and take your final photos. You want to take the after photos, and you don't want paint cans or ladders and anything in the photos, because you want it, you know, it wants to look like a completed project. So if you've got all that stuff laying out, it looks like maybe you're not done. But so you would take your set of after photos, and these again are like real estate photos. You don't have to take close-up detail shots. And again, they are keyed to the floor plan, and you would have a tally sheet of receipts, and you would have receipts or proof of payment. Whoop, we went back. And I say receipts or proof of payment. They do not want you to turn in just copies of your invoices, because the invoices show that you owe people money. It doesn't show that you've paid people money. And so I have some clients that, you know, they copy their checks, or they get a copy of their checks from their online banking, and they attach that canceled check onto the invoice that it went with if their contractor doesn't give them receipts. But the program wants proof of payment. And you don't have to have a spreadsheet. That's why we ask for a tally sheet. But if you do a spreadsheet, wonderful. And I suggest that people do a catalog of receipts on the tally sheet, where either you number your receipts, you know, 1 through 30 or 1 through 200, whatever you got, or ABC, AABBCC, but you catalog those, you put those on the tally sheet or on the spreadsheet. And so that if Tom Marr, the tax credit coordinator, when he's certifying your project, that if he sees something on that line item, maybe he sees a window and he didn't recall approving windows for the project, he can look over, it's like, oh, it's receipt number CC, and he can turn right to it and see that, you know, you ended up buying a replacement window for something, or maybe it was just a piece of glass, maybe it wasn't an actual window. Or if he sees that, wow, you bought a vinyl window, and he would be telling you he has a problem. So we turn in all that documentation. And this is also because their program gets audited, and they go through, you know, if the auditors come in, they go through that. And this is also, if you ever get audited, you will have a copy of all of this. And you would have a copy because you made a copy. Anything you turn in does not come back to you. So, you know, your photos and floor plans and all of that, you want to make copies of that, or I scan everything in. So I always have a digital copy that I can send to my clients on the things I do for them. But anyway, this says, you know, when you completed your project, this one says it was they spent $37,887. And the project started in May 2021 and it finished in November of 2021. I keep going backwards somehow. So that is the part 3. And so and then here's just I've got some examples. I don't know where we are on time. But this was a rehab that I did on, this is a rental property I had. This actually was my first federal and state project, but we had a fire in there. And so this is a good example of compatible treatments to repair damage after a fire. Of course, we had, you know, some insurance money on this, and the insurance just wanted to do a line of siding right down this. They didn't want to feather the siding back in. And so then this was the completed whole side of the house after the project. And, you know, and new paint color and all of that. This was the inside. This would have been like a part 1 and 2 picture up here, the before picture. And then this picture down here was for the part 3. And we just put everything exactly back like it was. This is just a detail of, this looks like a black and white photo up here at the top, but it's a color photo. And you can see, just for age, this barge rafter on the side is missing. And so that was part of our project, is that we were just really going all over the house. Besides doing just the fire damage, we were doing the maintenance on this. This mantle was not original to the house that's missing, but it was damaged in the fire. And so I looked around for mantles, but we never could find what we wanted. And so we had this built. So that was an applicable cost. And we could have, if we'd found a mantle to install there, that was our, you know, an antique mantle, that would have been an applicable cost, or having one built was an applicable cost. So either way, so that one got built. And then all of this, of course, got repaired. So then here's an actual breakdown of this project. So this total project cost was $176,000. This roof was 30 years old, so it needed a new roof. The fire flashed in the attic, so we had to redo the wiring, which the insurance would not cover. We did some things that would make the house easier on the renters that would be renting in the future, which was insulating. We blew insulation in the walls. We purchased storm windows. And this little room had been built on, and we were able to show, you know, that was an addition. It was not original, and that like this column and this bracket was enclosed. And so the Park Service approved us taking this apart and restoring the porch. It's a fun little project. But anyway, so it was $176,000 project cost. At that time, the Park Service review fee was $800. Restoration review fee was $400. That is still the same for income producing properties. We earned a federal tax credit of $35,200. And we could have used that on federal tax filings over 20 years, but we used that up in 5 years. The state tax credit we earned was $44,000. And there's a transfer fee when you sell the tax credit. After you get the tax credit certificate and you decide to sell it, that was the fee, and it's based on how much tax credit. It's like 75% of 1%. So it's very small, but that's what it worked out to. And so then I sold my tax credit to a bank. At that time, I found a bank that paid 84%. I have one now that pays 87%. And they'll pay more depending on how large your tax credit is. If you have a $400,000 tax credit, they'll pay 89, 90%. But anyway, we earned from selling the tax credit, almost $37,000, and we applied that to the construction loan. So that's kind of how that works. So if you are considering doing a tax credit project, do call Tom Marr at AHPP. He's the tax credit coordinator before you begin your work. He will send you the forms, and he'll email those to you, or you can come by the office and pick them up to fill out, and get your application in hopefully before you are ready to get started. Right now it's taking them about 2 or 3 weeks to respond, because they've had so many applications and just one person, Tom Marr, that takes care of those. Take photos of the interior and exterior before any demolition or construction. And I don't know what that says, Patricia, because my face is covering it. Consult with something.
Consult with your tax professional.
There you go. So yeah, so if you're, think about, if you've paid taxes last year, what were your taxes? Are they probably going to be about the same? Would it be great if you had a tax credit to offset that? And so then, this goes through the state of Arkansas, DFNA. And so Eileen Henderson is our contact over there. And so if you had any other, questions about that, you could talk with her or email her. I don't know if you want to open it up to questions since we're running out, but like, this is an example of incompatible work that someone needed to repoint. And this is red mortar over here to match red bricks. And so this was a historic treatment. And so this was a repair. This is probably not a tax credit project, but that's an example of some things that you'd want to be wary of.
We do have some questions. So I don't know if we want to go through your befores and after, which are always lovely.
Whatever y'all want to do, just tell me.
And
or I can just keep scrolling through them while y'all.
Well, okay, then I'll go ahead and just put some of the questions out there. A couple of them you actually ended up answering during your talk, which was, the first one was, about what do consultants' fees, architects' fees, are they part of your qualified rehabilitation expenses?
It is. If you're residential, though, you may cap out depending on your project. So if you cap out, it may be that, like when I do a project, my invoicing is the last to come in because I do the last part of the paperwork. So sometimes like my last fee may not count because, depending how your project worked out. Also on those residential, you can do another tax credit on the same address. The part 3s just have to be 2 years apart. So you could get strategic and plan those projects out on the residential ones.
Very good. The question, there was also sort of a question about your fees. Is it a sliding scale depending on the size of the project, or do you have a set rate, or how do you approach?
Yes, basically yes. Because there's 3 different types of projects. I do have, some like the commercial projects have like a percentage figured in. Residential, I try to keep them kind of capped myself because the residential people are capped.
Yeah.
So.
And then you said the other day when we chatted about it a little bit, if people just need a little bit of guidance, you'll help them on an hourly basis if it's not a major or straightforward project. One other question that came up too during your talk is we were talking about other review bodies. Is there an appeal process if there is any conflict with the historic district and design overlay district, I guess, and the Park Service? So I guess really you ultimately decide, are you going to go for the tax credits or not? So I don't know. What has your experience been?
I know that there is an appeal process on the federal level with the Park Service. They really will I mean, I don't want to say they don't care what your historic district thinks, but the Park Service, I mean, they just won't be held hostage by local entities. I mean, I was telling you the other day about a project where the person didn't get what he wanted, and so he tore his house down. And he said, you can tell the Park Service, I'm going to tear this down unless you let me do this. And the Park Service is just like,
Yeah. Well, and I think, my experience was a historic district commission could be more strict, but they can't be less strict than the state or the feds. I
I
mean,
wouldn't think so. I mean, most historic districts, I mean, I think they try to go by, the rehabilitation standards. And of course, those are always up for interpretation.
right.
The tax credit program is a very subjective process because every property is different. My house that's 1890, I couldn't do the same things in this house that I can do in my 1920s bungalow because, there's 30 years difference there.
Right. So, I mean, that's the important thing is every property is specific. I mean, site specific. So just because it worked for your next door neighbor doesn't mean it works for you.
Right.
So I think that's something that you have to convey as well. I just double checked with Shelley. She said she doesn't have any questions on YouTube, but we still have a couple more questions on our Zoom. Would you be willing to share which bank gave you 87% of your tax credit?
Commerce Bank up in Missouri.
Okay. And a question about, can you email the presentation? And we did reinforce that, the presentation is going to be on YouTube, so people can look at it at any time, but we'll leave that up to you to decide if you want to share the presentation, which we can send to the participants. Let's see what else. Someone else asked a question about where they can find the YouTube talks for the year. And that's just simply, if you go to YouTube and Google Quapaw Quarter Association, you can find them. And Shelley shared that, that link as well. A question as well from Rachel. Amber, what is the procedure for historic tax credit applications right now since the federal fiscal year 21 allocation is used up?
Well, it's, I don't know, Patricia, are we in that fiscal year where it's used up?
Yes. So, as we were talking about, state fiscal year is July 1 to June 30. So fiscal year 21 started July 1 of last year, and all the tax credits were used up. And my recommendation certainly is that folks get their materials in. And if you have a part 3, if you're done with your project, we recommend that people get their materials in. So what is your experience with your clients as well?
Right now it's kind of working out well because like we're in February and I have clients. I mean, I turned in 3 part 3s last week and they were all approved, but they're not getting their tax credit certificates until July 1.
Right.
So that's not a long time to wait given that it's February now, but I've had clients that got their projects done July 1 last year, and all the tax credits were dispersed on July 1. So some people have been, going to be waiting for a year.
Right.
But yeah, we're just turning them in and getting in the queue. It's kind of a first come, first served basis. And so it's important to just, if you're done with your project, go ahead and get it turned in. I've got another client that he was asking me, should we go ahead and finish and get it turned in, or should we wait, or what should we do? And of course, with the legislation, we're hoping that the budget is also going to be fixed on July 1. And they were like at 50,000 on a residential project and still have another big piece of a project to go. And I said, I think it's all going to be fine come July 1. So why don't you go ahead, since you're not about to cap out, and do your project? And then plus the fact also, if you get your tax credit in 2021, you can only use it, you can either sell it or you can use it on your filing in 2022. So even when you get it, if you want, to use it, you can't use it for till the following year. So that's kind of what I'm advising people.
And I think we're thinking the same thing. We have another question. Trey's asking, so you own a contributing structure, a residential house. There is a storm, the roof is damaged, you have good insurance, and it pays out $10,000 for a replacement roof. Can you put an application through for tax credits for the replacement roof?
Is the roof going to cost $10,000, or is it going to cost more than that?
That I'm not sure. I don't know if that covers the entire roof cost. So we'll ask Trey to fill in a little bit more information.
If you deposit, if you do it in such a way that you deposit the funds into your account and then you spend the money out of your account, there's really no question about whether you can do it or not.
Okay, and he says, well, assume it is a 10,000 total cost.
Okay, I
Yeah.
would advise to deposit the money into your account so that you just pay for, and I mean, it's your money, you pay insurance premiums, but that way, because they only look at the program based on your receipts. So, I mean, I've been through insurance claims twice on different nightmares. And so I know, that some people, you set it up where maybe the contractor is drawing from the insurance, but I would think on a small claim like that they would just give you the money.
And let you decide whether you use it towards your roof or decide
Exactly. Or whatever
okay.
you decide to use it on. Yeah.
We have another question from Michael. If I have a project that takes 3 years and I spend 20,000 one year, 40,000 the second year, and 20,000 the third year, how does this work with the federal program? So that's looking at your phasing of project.
Yeah, you'd have to do a phased project. On the federal program, you get 24 consecutive months to claim your expenses. And so, like, if you start your project and then you had to take a break for some reason and then you finish it up, you can get screwed up knowing can only claim 24 consecutive months. And so now they've even come out that you must pay, if you want to do a phased project, those are projects you think that might go over 24 months. You need to ask for phasing at the beginning of the project. And phasing gets you up to 60 months. So if you had a project that was going to be 36 months or even 30 months, or it was cutting it really close, like that, everything would have to work out perfectly right for you to get it done in 24 months. I would do phasing on the federal. And then the state, I have a lot of projects where they didn't do phasing. And so we kind of get stuck, but something happened and the project didn't get done in exactly 24 months. But the state lets you claim up to 60 months. So a lot of times, maybe you can still go ahead and claim all your expenses on the state side, but you only get to claim 24 months on the federal side if you didn't phase.
So hopefully, Michael, that helped with your questions about the project. But I do know that some of those very, very large projects is not unusual for those to get phased with the feds. It's just a matter of knowing, I guess, how your project is going to progress. Did anyone have any other questions? Let's see.
I wanted to say something about this slide I have up.
Oh yeah, go ahead. You're right ahead.
So this was the Coca-Cola building in Morrilton, and it has these really cool terracotta blocks that were the wall material on part of the building. And the owner wanted to cover those up. And I had told him he really needed to wait till we heard back from the Park Service about covering those up. Well, of course, like the same day we got approval and that said, do not cover these blocks up, he sends me pictures that he's already covered this up. And I'm just like, ugh. So I actually called at that time Ann Grimmer. And it was funny because they know that everybody hates this stuff. And she actually laughed and she said, he covered it up, didn't he? And I said, yes. So they took it, they have a little, I don't know if it's the same way that their appeals process worked, but they had several different reviewers look at it. And he even tried this. That block was in another part of the building that they were actually leaving it alone or going to uncover it. It had paneling over it. He said, well, we're uncovering it on that other side. I said, that doesn't matter. It's all or nothing. So, and then they tried to tell us, well, we shot nails into it. So if we uncover it, it's going to be all cracked. And I'm like, they don't care. So anyway, they came back and they said, no, he has to uncover it. So he uncovered it, and we did get permission to this screeding wall down here to cover that up, but he had to uncover all this up here. And then we actually got a compliment on this project. They said that just a little email compliment, like this was a very nice project. And this was this Coca-Cola building. This were these Coca-Cola medallions that we found when we uncovered this room. But anyway, I'm working on a different project with them now, and the owner came up to me, he said, you know, that terracotta block? I said, yeah. He said, I love that stuff. And I said, yes, that's exactly what we want to happen. This floor was covered up. They found it under this. And then they really worked hard to reveal the whole thing. And so that was amazing. That was there. Oh, this is an apartment before and after kitchen. This is an Abelese apartment. But anyway, I'll just keep scrolling. Do you have other questions?
I don't think we have any other questions, but these are lovely. And, we've talked about this before too. I know folks sometimes are a little bit chagrined by the requirements of the Park Service, but part of the issue, of course, is you are getting the benefit of federal funding or state funding. And so, yes, the standards are very high, but the benefits are also very great. And I think there's the acknowledgement that, rehabbing a historic building is more expensive than new construction and doing it the right way. And so that's, the acknowledgement with the tax credits. But I think that's the thing you have to think about too. It's a public trust issue as well, that, these projects are scrutinized and, the standards are high, because it is a benefit. It is a benefit to that private property owner. We do have a question from Hannah. She has a constituent who wants to paint over the structural clay tile as well, and it's fun to see their perspective change. So that is a very nice comment. That
Yeah.
I think when people have a little perspective and opportunity to be in the space, they can appreciate that.
Yeah, well, I've had another client like that too, that their building over in North Little Rock had this vitrolite glass on the front of it, and he really wanted to go back to an earlier time period, like 1900, and he got caught in the thing about maybe your building has gained significance as it is, and so they wouldn't let him go back because that other storefront was long gone, and so we had this 1930s. And he just hated this vitrolite glass. And I was like, yeah, but you're the only one with it. It's beautiful. And anyway, I don't know. He was really disgruntled. I wonder if the project would continue. But anyway, he called me a couple of months later. He said, well, you can call me Mr. Vitrolite. I have fallen in love with this stuff. I can tell you all the people that have it or that reproduce it, and we're going to, do it.
Lovely.
And it is this building, the Winchester building. I listed this to the National Register. And it was interesting because these architects had never done a historic project. They do new construction. And so there was a learning curve here. And the things that made this building eligible for the National Register, it's mainly, eligible architecturally, the Art Moderne. But the things that stick out, like this curved corner front door and this garage door, they wanted to get rid of. And I'm just, it was one of these, it's like, okay, I can get you eligible for tax credits, but these things that you want to do would not be approved as a tax credit project. And so they wanted to change this garage door out to just a regular commercial doorway. And so we talked about some ways, that they thought were cool, but which are typical to historic preservation tax credits. But they asked, and they took the same door, and you will notice it is the same door. It had the glass at the top painted, but they took this wooden door and were approved to put in glass panels. And so they've kept that door. They wanted to ask if they could put glass block in all of this. And I'm just like, why? You just keep the door shut if you don't want to use that door. And so they did get a new commercial door, but they repaired the glass block.
Yeah, and that's an awesome project. We gave them an award. I know Preserve Arkansas gave them an award. It is just remarkable. And I think they're really proud of the way it turned out as well.
They are, and they were in their acceptance award for Preserve Arkansas. I mean, the architect said, our biggest challenge was ourselves. And I was like, no kidding. but no, I'm so proud of them. They really knocked this out of the park. And it's put this building back into service. And so many people have watched this building for years.
Well, and that's an area of town. Again, we think about it, this is potentially a catalyst for an area that needs revitalization. And so a corner lot, a big property that had been vacant for like 20 years or not used for 20 plus years. And it's just wonderful. Wonderful.
Yeah. So anyway, so, you can do, big cool projects. You can do, you can just be rehabbing your bath or kitchen. They're really, they tend to be lenient on kitchens and baths, especially like if you're staying in the same room. Of course, where I think the biggest problem I see with kitchens is that like when people want to expand into the next room, they want to take out a wall and make it like the wall was never there.
Mhm.
And that's one of the caveats is like you can expand, but you need to leave enough header and framing to, trim it out and do a cased opening so you can see that, oh, there used to be a wall here. And most people, once they realize that, I mean, they figure out, how to make that work with their idea. This is a cool sliding door that was kept on a project. And this is one of these, a significant architectural element. And then this is how, that door is still there, but they did add commercial doors.
We have one other question that popped up from Becca. She said, one more question. I don't understand why you can't expose brickwork. What if the paneling was added later and the brickwork was original? Who's to say?
If, well, it depends on the building. Usually on the houses, you don't have exposed brick. You've got lath, you've got plaster. On these commercial buildings is where it usually gets into an issue. But and then if it was a warehouse, a lot of times those warehouses will have exposed brick already, and that is fine. But depending on the building and usually the telltale signs, I mean, everybody knows if in historic preservation whether it had plaster or whatever on it, or if it was not exposed. And that's what they get into. It's about the integrity of the building historically. So if you had a plaster wall, and I've seen some people that they try to make a case that, oh, they covered this up with plaster. Well, in the 1900s, if you had someone into your house and you had maybe your chimney was exposed, I mean, it would look like people would think you didn't have enough money to finish your project because
that kind of goes back to a little bit more what Becca was asking. She said, I'm talking a residential late 30s kitchen brick oven situation. So potentially.
Yeah, a brick chimney flue like in the kitchen those were covered with plaster. Or if there was, molding, depending on, what kind of high style was in there. Of course, kitchens on the 1930s house, I mean, you're still at a point where that may have had servants and it would have been a more utilitarian space than your finished spaces. But if there is it's like you can't expose it as part of your project. But I go into a lot of projects where, it's already exposed for whatever reason. I mean, maybe the whole house is in ruins and the plaster fell off and it's exposed and you want to leave it exposed, you can. But you can, if it's already exposed, that's one thing. But it's like you can't turn in your part 1 pictures with plaster on your brick and then turn in your part 3 pictures with your brick exposed.
Right.
And what they'll ask you to do is cover it back up, which would probably make most people that love exposed brick ill. But
Right.
If you want to get that benefit.
Well, I appreciate all of your thoughts and beautiful projects you've worked on, and certainly the opportunity to pick your brain on various things. I'm going to just jump back and share my screen one last minute and just put in a plug once again for our next preservation conversation. And certainly, if you all have questions, don't hesitate to reach out to us. We even had folks who reached out to us, both Shelley and me, in advance of this talk to get in touch with Amber, and who was a very generous resource we have found on many occasions. So
yes, and I did talk to both of those people that you said wanted to talk to me. So
yeah, so I assume that the case would be the same, and certainly
sure.
You can take a look at our YouTube channel if you want to take a look at this presentation again. But again, thank you so much, Amber. Thank you really for everything you do, helping us tonight and the work you do in the Mansion area, and have been always an easy person to call and jump to, helping us with television spots sometimes and the house tour and what have you. So we really appreciate your experience and your willingness to to help other folks who are navigating this for the first time. I do want to mention that we have a preservation conversation coming up next month. It is Kathleen Pate, who is going to talk about women's suffrage in Central Arkansas, people and places. And it is Women's History Month the next month. So it's a good tie into that. And it'll be the same. We're doing this virtually, of course, 6 o'clock on Thursday, March the 11th. And keep in mind as well, we hope that our tax credit modification legislation is going to be introduced next month. I'm sorry, next week. So, so if you have some folks who you think would be willing to, reach out and, reach out to your legislators, we have a lot of support with our local legislators. And we're pretty well covered in the central area, but we certainly would like legislators from areas outside of Central Arkansas to get support and co-sponsor the legislation. Phyllis Brown has her hand up. So let me see if I can find her on this.
Hey, Phyllis.
On this note as well, and see if she would like to ask a question. Hold on just a second. I'll take her off mute. There we go. Phyllis, did you have a question you wanted to ask, or any thoughts, or I think she's still muted? So I don't know if she had a question or just wanted to raise her hand, which happens sometimes too. Oh, there she is. Hi, Phyllis.
Hi. Hi, Amber.
Hi, Phyllis.
I heard you say, Patricia, that something is going before the legislators.
Yes, we're trying
tax modification. What might that be?
So there are basically three components in the draft legislation. One is to raise the cap. Right now, the state cap each fiscal year is 4 million. We're asking them to increase it to 10 million. The second modification is to extend the length of the program. Right now, it's going to sunset in 2027. And Department of Heritage has made the request that it extend until 2037, so an additional 10 years. And then the third part of the legislation is to modify how the fees are used. So right now, as Amber mentioned, when you put an application together, you have a fee that you pay for the processing, and it is earmarked for education and outreach. And they're asking if they could use the funds to support the personnel who actually administer the program. So those are the three modifications that are in the legislation right now.
Thank you.
Yeah.
Patricia, I have a last minute question on YouTube.
Oh, yes, go ahead.
And it is from Leaf Hassel regarding electrical and low voltage renovation. Are there any places to watch out for adding outlets, running data wiring, etc.?
If you're wanting to do, like typical, running it through your basement or under your house or down through your attic, through the walls, and just like a typical install where it comes to a location in the wall to hook up to. No, I mean, that's all approvable. And in fact, I've got a tax credit on my house right now. And that's one of the things that we did, because before that we had a wire running through our transoms upstairs for one of our daughters. So it's very classy, but anyway, but no, that's definitely a cost that you can count.
Lovely. Well, thank you all very much for joining us tonight. And thank you again, Amber. Good to see you,
Thank
Shelley,
you.
since we were working remotely
Yes,
today
thank you,
with all this
Shelley.
crazy weather. And we look forward to seeing everybody next month. So everyone's good night. Stay
Good
safe. Be
night.
careful out there.
Bye, Phyllis.
And,
Bye, Amber.
bye, Phyllis. Good to see you, Ish.
Find me a contractor.
Oh, yes. We'll get,
Right.
I know it's a struggle.
I sent you an email with another recommendation, so hopefully you got that. If you
You
didn't,
did?
let me
I'll check my email.
Thank you,
Check your
Patricia.
know. Okay, bye everybody. Good night.
Good night.
Bye, Shelley.